All right. Hi. Okay. So today is my next live stream. So every time I'm trying to do it better and better. Okay. I'm setting up some things and obviously learning myself. Like I said, it's just a very beginning for me. Now, my name is Simeon. I'm not a trading guru. I'm Forex and CFDs industry insider. I've been working for 10 years for top global Forex and CFD brokers. And my main job was to help novice traders to get started, to understand how the trading works, to make some money, and of course to understand the risk involved and a lot of other things. All right. So since then, all right, like 10 years, like I said, I was running that business, and now starting from 2026, I decided that I would like to start sharing that experience and giving some obviously hints and insights about trading that you will never learn from anyone else. Okay, there's no let's say, a trading guru out there that would know the business from the broker's perspective and how the brokers make money and stuff. And of course, yeah, these 80% of people that lose money constantly in trading, and I know why. And there's 20% of people that constantly make money in trading, and I also know why, right? And it's not that difficult to actually start trading, to understand trading, right? It's pretty much simple, even though they say it's complicated, but it's not. So once you start trading, the most important thing that you need to always know is first of all what you trade. And therefore, I did a session. I did a video on my channel. Is how to get started and trading explained in Mickey Mouse language. So if you didn't watch it, okay, then subscribe to my channel and watch it later. Now, moving forward, one of the most important things in order for you to make money in the market is to follow the news, is to understand what's really happening, all right? Because every single day something happens in the market. And then whenever something happens in the market, it creates so called volatility. So it means that the prices of different assets can go up and down. And that movements is something that you really want to find, to identify in order for you to make money, because the only way that you can make money is by obviously selecting a direction, either buy or sell. So this type of news created opportunities when the market starts shifting up or down. And what I'm gonna do today, I'm gonna go and review with you the news. I'm gonna review with you the capital markets. We're gonna see together what's going on today. Okay, what kind of movements happen, let's say, and of course, what kind of opportunities you can have today to trade. So if you are watching me now live, or even if you watch me later, right, I want you to really understand the way you want to consider different, let's say, markets announcements or news. So that's something that we're going to do today. All right. And I'm going to be helping you, like I said before, explaining to you that very simple, in simple language, okay, Mickey Mouse language, I call it. And that's what we're going to do now. So let's go to my screen now, and we're going to turn to my screen. And therefore, give it a moment. We're gonna need to go to open. Yes, here we go. So on my screen, okay. So now we are looking at my screen, okay. And what we're gonna do now, we're gonna go to investing.com. Remember, so investing.com is the place where you can go to get some information about the markets. It's one of the biggest financial websites with a lot of analytical data and a lot of information and stuff. So if we go to investing.com, the first thing that you may want to look at on the right side is the markets. Okay, you can check it either here. You see indices, commodities, bonds, and stocks. Right, you can see that today, let's say the U.S. index, right, going up. But again, just to make sure that you understand what that really the market consists of, let's click here on markets. So so when we go here on markets, so see you're gonna have access to now many other, let's say, different different type of markets over there. Okay, so bear with me. Right. So once you go there, okay, and you look at the markets, you're gonna find there world financial markets, okay, and on the world financial markets, you're gonna see different, let's say, type of markets like S&P 500, DAX, FTSE, Nikkei, gold, and crude oil. Now, if you don't know what this consists of, like what the capital markets consist of, I really want you to check my video on the very first video on how to get started, how to understand trading and what your trading account consists of. So now you have access to 5 class of assets since you have your trading account, for example. Okay, and what's the most important is just to understand. Give me a moment, just watching myself live as well, just to make sure that everything runs smoothly. Now, let's get started then, okay? So, world's financial markets. You see S&P 500. Now, what is S&P 500? As I always repeat, it's 500 biggest companies inside one basket, so inside one index, okay? That's what it's called, indices. Now, 500 biggest companies in the US. Now, DAX. DAX is the German index, and it measures 40 biggest companies in Germany, right? And then FTSE, that's 100 biggest companies in the UK, right? And the index obviously measures the performance of that 100 companies today. Now, Nikkei, that's 225 Japanese companies, right? So inside one index, inside one basket. And you see that gold is going up today, crude oil is going up today. Okay, so it seems that the markets are very positive today, right? That's what you can really observe now. So as you may already noticed, okay, you see that majority of indices, meaning like companies, so going up today. Okay, we look at the gold and crude oil; they're also up. But if you look here in commodities, you see crude oil is up by 30 cents, Brent oil by 33 cents, gold is up by $38 today. Okay, then copper is up, and then silver is up, okay, and stuff. Now, if you look at dollar index, by the way, it's also index that measures the strength of the dollar. So it means that the index is up today as well. So the dollar is getting stronger. Now, if we keep looking down, okay, so we just checked indices, right? Then we look at yeah, here we go. Look, you can check indices of any country. For example, you from Brazil, or you from I don't know, like Germany, or you from South Africa, okay, or any other country where you're from. And if you are trading, let's say, your own companies, or your own stocks, or your own indices, you can find the performance of your country and the index of your country that will include the number of the biggest companies in your country, and that will be it will be here, and you will see if your companies, let's say the biggest companies in your country, are doing well today or not. Because what that means, so imagine index, it's like I said, it's a basket with a number of biggest companies, and index is a good let's say barometer, right? In order for you to understand how the overall economy of the country, right, is doing today. Because index, like I said, consists of the biggest companies. So if the majority of biggest companies inside a country are doing well, okay, so if basically they're doing well, it's a good thing that the whole economy is doing well. You understand? So that's why it's important to yeah, to have that sentiment. So when the prices are increasing that much, it's a sentiment. It means people keep buying it. People, investors, bank, hedge funds, and stuff. All right. So it means that the money is going there. That's why it's keep rising. So that means that circumstances are good. So if you was going to trade index, this might be a good opportunity for you to consider. Now, moving forward, okay. Now we're gonna look at stocks. Now, if you remember, stocks are companies, right? So companies like Amazon, like Google, like Apple, like JP Morgan, and Nvidia, Microsoft. So here you can see the performance of these companies, right? And you can see the performance of yesterday, right? And then, of course, you can see the performance for longer period of time if you check here. But anyway, we just want to see what's going on. It seems that the stock market, what was that? That's price performance. Now, this is the stocks. Okay, so it shows how much this company is gone up by performance. So if you look, for example, at Boeing, in one day it gone up by 44%, in 1 week by 3%. 1 month is down by 1.47%, but in 1 year is up 31%. 3 years is up 15%. Now, this way you can actually check the performance of many other companies, like look, McDonald's steadily going up, right? Every single daily, weekly, monthly, yearly, and so on. So that's how you can see the performance of different companies when they grow. Okay, and you can select once you want to set up a portfolio, right? Now let's move forward. So we're gonna go to currencies. Now currencies, that is exactly what Forex stands for, right? Foreign exchange. So foreign exchange, that's exchange rates between different currency pairs. And today you can see the list of many currency pairs. Like look here, euro slightly lower down today against the dollar. US dollar though is higher today against the yen, right? Wait a second, why did it change to futures back again? All right, so let me probably refresh it. Now, anyway, moving forward, so that is currencies. Okay, so that's the performance of the currencies. So if you're following specific currencies, let's say, or you're trading some currencies, you can see the performance here as well. Now, then, look, this is something just for you to get an idea on that classes of assets that's available to trade. Okay, let's go and observe the market news. So we're gonna click on news, and let's go just through headlines to see if there's anything important. Fed minutes ahead. Palo Alto Network slips. What moving markets? Let's just see what moving markets today. Okay, so that's important for you every time. Let's say when you go to trade, it's important for you to observe the markets and to know what's driving the markets. Okay, and what kind of opportunities you may have today. So if you look here, right? Let me. So it's. Um, Give me a moment. Okay, I'm just need to log in. Give it a sec. All right, I'm gonna log in just to get rid of this thing. Okay, and right, here we go. So look at this. For number one, so what is moving the markets today? Number one, futures higher. So futures higher, like we said, all right. The biggest companies in different countries are moving higher. Okay, so it's a good opportunity to trade them. Now the second one, FOMC. So minutes from the Federal General Meeting, and we're talking about Federal Reserve, right? Due out on Wednesday, so could provide more insight on the path ahead of the central bank's monetary policy. So this is something that we're going to check together now on the economic calendar. So as we may see, the FOMC meeting, it's the Federal Reserve, okay, they are meeting to see the different reports and then obviously discuss if they want to increase or decrease the interest rates. Now, oil ticks up amid US-Iran talks. So oil prices edge up after tumbling nearly 2% in the previous session as sign of progress in US-Iran nuclear negotiations, eased fears of supply disruption and damped risk premiums. So you see, oil is also a good opportunity to trade. Now, Palo Alto Network slumps. Okay, so this is something that's Berkshire slashes positions in Apple. Berkshire Hathaway lowered its holding in tech giants Apple, right? So as you can see, they selling Apple shares. Just wondering to see if there was any response on Apple on that announcement. Give it a moment. Let's just quickly look at it. All right. Now, you see, Apple gone up yesterday by 3%, and even today on pre-market, it's still like $1.27 up. So it didn't really impact Apple, okay, that announcement. So anyway, it seems that there's no much on, let's say, on the markets to say that there's something like big happening. So that's why we're going to go and check together economic calendar. Now, what is economic calendar? As I'm always explaining on my sessions, economic calendar is the place where you may want to go to check if there's anything coming up anytime soon, all right, in your country or any other country, the assets of which you are trading. Because when you go to trades, and I would say that 90% of people, when they go to open their trades to go to start trading, they don't even know about the existence of the economic calendar. Now, they don't know about the existence of one, but the economic calendar is the most crucial thing that you must always have in your arsenal and that you must always check before you place any trade. And even after you placed your trade, you must be checking for the announcement that coming on the economic calendar every day. Now, if you look here, right, I'm just looking at the economic calendar for today. And if you just understand, you can look at yesterday, tomorrow, this week, next week, and so on. Now, in order for you to make money in the market, all you need is just to understand what direction the price is going or is expected to go. And there's only two directions, up or down, right? Now, when you basically go to trades, you may see sometimes the market price of any asset either skyrockets like crazy. By the way, we can go and check something together now. If we go and look at Trading View, okay, let's go and open Trading View. All right, just to give you an example, give it a moment, let it load. All right, on the screen. So when you go to trades, okay, and you want, for example, euro US dollar, okay, let's just quickly check the euro US dollar and look at the full chart. I'll show you. I'll show you what happens when the news happening. So if we look at today, for example, okay, what are the news happened today? You see, interest rate decision in New Zealand, right? It was at 3 o'clock a.m. my time, right? GMT +2, 3 o'clock in the morning. Okay, that interest rate decision was taken in New Zealand, and you see, the Reserve Bank of New Zealand governs decide where to set the rate after consulting senior bank staff and external advisors. Traders watch interest rates changes closely as short-term interest rates are primary factor in currency valuation. Now, a higher than expected rate is positive, bullish for the NZD, while a lower than expected is negative, bearish for the NZD. So you can see it happened today at 3 o'clock, and it happens every single month, right? Once a month they do that decision. And lately it was, let's say last time it was as expected. So there's not much, happened today. But still, there's a chance that a New Zealand dollar reacted on that. So why not to check on that? Let's say NZD USD, just for you to see NZD USD, right? Here we go, NZD USD. Okay, here we go. NZD USD. Now let's have a look. Okay, NZD USD. And look at this. Okay, that's what I was just talking about. Okay, and now remember, my chart now is on 1 hour. But if I put that, let's say on 5 minutes. Okay, 5 minutes. And look at this, 3 o'clock. Right? Remember, I was showing you here that the report was coming out at 3 o'clock. Right? And look at the report results. So the report came, by the way, as just so you understand, the actual came 225. So it came as expected. Okay, as expected. So they expected that they're not going to increase or decrease interest rate. Right? So in fact, they said they're not going to increase interest rate. Now, if they're not increasing interest rate, there is no reason for the New Zealand dollar to go higher. Because obviously, if they increase interest rate, then you're getting paid more if you obviously invest in New Zealand, right? But they didn't increase, and that's the reason why the New Zealand dropped, and it's actually dropped. You see, in that 5 minutes, it dropped from 0.6043, it dropped to 0.6010, and it continued to actually keep going down. Now that's 5 minutes, so if we change it, let's say to 15 minutes, okay? Look here at 9 o'clock, sorry, at 3 o'clock. All right, here we go. At 3 o'clock, it dropped down and it came to this level, right? And since then, you see the market is picking up back again. So, as I said on my previous session, right, in the market, they say whatever goes up a lot has to go down, and whatever goes down a lot has to go up. Now, today, the price gone down a lot because of that report that obviously you just checked today. And the price gone down, which created an opportunity to buy the dip. And if you was to go and trade it, you could do that at 9 o'clock. So basically like 6 hours later, once the market adjusted that news, okay, and you could go there and you could start buying the dip. That's what they call it in the market. So when something goes down a lot, you want to expect it to go higher. And when something goes higher a lot, you want to expect it to go down. And the only reason for that, if we put, let's say, hourly chart, is because markets are cyclical. Look at this, right? If I'm going to bring the graph, okay, like that, and I'm going to put it like this. You see, the markets go up and down, up and down, up and down, because they're simply, like I said, cyclical. They never go just one direction, right? Because people never just buy. People sell as well, right? So people buy and sell. And that's why when you trade something, okay, and the price goes against you, it's just a matter of time until the price will go your direction. And eventually it will. It may take, I don't know, a minute, an hour, a day, a week, a month, but eventually it will be there. So if you're patient enough in your trading, and if you're not rushing too much, right, to take impulsive decisions, then even if the trade goes against you and you understand the concept of the market cyclical, that being cyclical, then you have good chances of not losing but making money constantly if you're patient enough. It's very important to be patient in trading anyway. So now let's move forward. So this was example about economic calendar and its impact, just so you understand. Now there were more other reports coming this morning, okay, and up until today. So these reports now already been released. So once the report is being released, the market reacts accordingly. You could already notice that with the NZD example. Now, imagine, in order for you to constantly make money, right, you need to know only three things. And now you're going to need to either agree or disagree with me. So if I tell you that in order for you to make money, you need to know only three things. For example, you need to know what to trade, meaning what asset you want to trade, gold, I don't know, maybe silver, maybe Bitcoin, maybe currencies like Euro, US dollar, or anything else, or index. So you need to know what to trade, first of all, right? Now, then you need to know what direction to trade, right? So would you need to go and buy it, or would you need to go and sell it, right? Because there's just two directions. And what's the most important is to know when to trade, right? Because a lot of people can say, okay, I'm going to go and buy, but they don't know when. When is the good time for it, right? So imagine if you would know, let's say, that three things: what to trade, when to trade, and what direction to trade. Okay, you're probably gonna agree with me that you would be making money, right, constantly without, let's say, without any stoppage, right? So you could be making money and become a millionaire. However, you never know. First of all, okay, what direction to trade, okay, because the markets are something that you cannot really, let's say, be confident in, because it depends on so many things that are happening every day. Like I said, just these reports, okay, or let's say different type of let's say announcements or politician speeches. So they create that market movements. So as I just was saying now, okay, and to make money in trading, like I said, you need to know three things. You need to know what to trade, you need to know what direction to trade, and you need to know when to trade. So imagine the economic calendar is actually giving you all that two things out of three. So it's telling you exactly what to trade. Okay, so it's telling you what asset, let's say British pound or euro, or let's say Brazilian currency, okay, real or something. Or it gives you also a chance to trade any sort of assets in that country, let's say indices, okay, or companies in that country, because that reports actually create the movements on all the assets in the country. And then you know exactly the time. So you know the exact time. For example, this one, it's going to be in 2 minutes, German 10 years bond auction. Now, look, it's going to be in 2 minutes, but it has just 2 stars. Importance. See, importance, 2 stars. So the more stars, and there's just 3 of them, okay, the bigger is the volatility. Like, for example, here, you see, 3 stars is going to be for durable goods orders at 3:30 for the US, okay? And then it's going to be, again, what we just discussed on that news FOMC meeting minutes, 3 stars. So that's something that will be creating a lot of movements today, later on today. But what you need to understand about the calendar is that it allows you to know when to trade and what to trade. Of course, you don't know what direction to trade, but therefore you may want just to wait until the announcement will come out. You will see the market reaction like it happened with the New Zealand dollar, like we checked here, right? The market gone up. All right, so gone down first, and then it gone up after that, okay? So if you know that something happened and the price increased or decreased significantly, then you may want to be a little bit patient, wait a little bit longer, okay, and then see once the market's going to start reversing back, so that you could take advantage of the direction in the opposite direction, okay? Now, moving forward, okay, so when you go to trade, okay, you need to, like I said, check the economic calendar before you do that. For example, now in 1 minute, there's going to be a report on in Germany. And Germany is the biggest economy in Europe. So it means that this report will create a movement on euro. So if I was going to open a trade now, let's say I want to go and trade some currencies, I would need to avoid euro, by the way, right? Because if I go and trade euro now and the report comes negative or positive, look, it was just released, right? So let's see if it has any reaction on euro now. So if we look at it on 1 minute, okay, you see this report didn't really create much of the movements, okay, in the market. Let me try to maybe bring it up, okay, like this. No, it didn't really make any sort of movement, all right? Didn't create any movement here. So yeah, it's just 1 minute. So nothing. Like I said, this report is not that important, but reports that have that have, let's say, 3 stars, like what I was showing here, right? This report at 3:30. So if you're trading, let's say, or you're going to be trading today, you must avoid, let's say, euro, US dollar. You must avoid trading, let's say, gold, because they have a direct correlation, dollar and gold. Okay, so if one goes up, the other goes down. So if that's the case, you just simply want to avoid the trading them now. So like I said, so there's a lot of reports coming in the US later today. Okay, so nothing really much, all right, to discuss regarding the reports. Not many reports that have a lot of importance, but a couple of them still there. All right, so good to know. Now, as the last thing for today, as you can see, there's nothing really interesting in the market for, let's say, as an opportunity where you can go and trade. But what we can do now, we can go and open some trades based on technical analysis, like we always do. Okay, we always come here and we always trade some technical analysis. Okay, some trades that I explained to you on my very first video, how to trade basically signals without buying any signals, how to get signals for free. And investing.com allows you to get signals, technical signals for free. Okay, so to trade investing.com, as I was always explaining, you come here, let's say, to technical analysis summary, right, which you can find here at the top, technical, and then technical summary, right? Then you come here and then you click customize. Now, customization requires for you to set up your signals to show you the signals based on, let's say, 5 minutes, 15 minutes. I do half an hour and I do hourly. So that way I'm able to set up my trading to be something between short to medium term, right? To observe the market trends. So if I click on apply, now I will be looking for different opportunities that either have a strong buy or strong sell recommendation on all 4 time frames. You see, so if I have something like buy, neutral, sell, and strong sell, I just don't trade that because this is very, let's say, mixed signal. Okay, but if I see something like USD JPY that has strong sell on 4 time frames together, this is so-called 4 aces strategy. Strong buy, or strong sell, strong sell. So look, USD JPY, strong buy recommendation. How about we're gonna go and open a trade on USD JPY, okay? And as we can see now, okay, looking at the market, you can see 1, 2, 3, 4. 4 candles of green color, and every candle represents 1 hour. So it means that every one candle represents now 1 hour movement. And it means that the last 4 hours, the US dollar was going higher versus the Japanese yen. So if we believe that the market will continue going higher and the trend will continue, we just simply need to click on buy. Once we click on a buy, because we believe that the market will go higher, we will need to go and trade with some amount, okay? So if I'm going to go to trade, let's say 1,000, right, units, and 1,000 units, it's actually 1,000 US dollars, right? I will be trading 1,000 US dollars. I want to show you my account here, okay? I'm just using this to give you an idea, right? Look, I have still one trade that we opened yesterday. It's already like making $588 back in return. By the way, we can just simply close it, okay, and collect the profits. Wonderful. So we opened some trades yesterday, okay, and you can trading journal, right? Let me close this one. So yeah, see, successfully placed, successfully closed, has been executed. So we opened some trades that's all closed with some profit. So we made like $10. And as I always do, I put a 10% return on every investment I do. Same thing I'm going to do now. So if I'm putting, let's say, 1,000, I'm using actually only $10, right? $10 of my account to open that trade. Now, why I'm able to use, let's say, only $10 to open 1,000 is because of my leverage, okay? You see leverage here? Leverage is the buying power that is given to you by the broker. So once you go to trade, you trade with small capital, but you trade bigger trade size, right? That's why you need a broker, because brokers allow you to have that leverage. Now, moving forward, you see, in order for me to open a trade now, like I said, I need only $10 out of my account. I have 1,000, let's say, right? And then if I want to set up my take profit, now my take profit, I'm going to go and put it in US dollars. So that will be easy for me to calculate how much I want to get back in return. So for example, if I'm putting, let's say $10, you know what? Some can actually put more because I have, let's say I'm going to put 10, 100, okay, 1,000, it's going to be $100. Now, $100 is going to be quite a lot. It's going to be 10% of my overall capital. Let's just put it, let's say at 50,000, right? 50,000, no, 5,000. 5,000 is going to be $50. Now, if I'm going to be using $50 to open this trade, I want to make, for example, 10%. So 10% of $50 will be $5, right? So now I want to make 10% return on my trade, okay? And should this $5 will reach, my trade will close automatically. So if you look at the rate now, it's 153.83. And I'm telling to the system that I want my money to be paid to me when the rate's going to go 153.99. That's where my $5 will be made. So I'm going to go and buy now, okay? Now, by clicking on that buy option, you can see that now my trade has gone live, okay? And I have it open now. Here we go. It's open, and it started with the 42 cents loss. As I always say, that loss represents the difference between buy and sell price, and that is so-called spread. So you always pay that difference to a broker, and you always start your trade with a small negative, and then you wait until that negative will be covered by the market. So now the trade is running, and it will close once this green line, you see $527, once that green line will be reached. So I can see that it's very close. So I need just for that price to go to that level, and then my trade will close automatically, right? So that's number one trade that I've opened, okay? And I set it to run on auto trading. And then let's go now to look at something else. So now I see Euro US dollar. You see strong sell, strong sell, strong sell recommendation. So I can go back to Euro USD, and I can look at it here, right? And it's on a strong sell recommendation. So what I'm going to do, I'm going to go and sell it. So I'm going to click on a sell, okay? And then I'm going to go and click here again as I did last time. I'm going to put 5,000. So that will be $59 now, okay? So let's say $60. Let's round it up. I'm going to go and I'm going to put here, let's say $6, right? It's going to be, again, my 10% return, right? $6. And that's what I'm going to do now. I'm going to set it up again to close automatically. So even if I'm not there, my trade will close even if I slip. Now I'm going to go and click on a sell, okay? And take profit order, modified, okay, market order executed, right, okay. So you see now I have two trades, okay? So my Euro US dollar open on short. One was buying long, the other one was selling short. So also started with a small minus, okay? And it's, like I said, set up my trade up to here. You see I'm going to make my $6 once the price is going to reach that green level. Now, then we're going to go and open one more trade, okay? So look, what we have here, USD JPY, we traded, USD CHF, strong buy, but you're already trading USD JPY, so why not to check maybe something else? Let's say Euro JPY, right? Or GBP JPY. Let's say GBP JPY says strong sell, strong buy recommendation, sorry. GBP JPY. So let's go and find GBP JPY. That's what we're going to do now. And it's a strong buy recommendation. Look for how many hours the price is going up, right? It's obviously a very strong upward trend there. So if I was going to buy it, I'm going to go and click on buy. I'm going to put again 5,000, right? Which is going to be $67 now, right? So I'm going to use $67. So why not to change it, let's say, to 4,000, right? To stick, let's say, to, yeah, okay, so $54.55. So if I want to make, let's say, 10% return, all right, on my position, I want to make $5.5, correct? That's 10%. All I need now is just to set it up like this, 5.5, right? And then just go and trade it, right? So now my trade also gone live. As you can see, started with minus $70 at a loss because of the difference between buy and sell. You see 20872, 20876. That is the difference. This is so-called spread. So you pay that difference to a broker, and you see I'm going to make that 10% return should the price just simply reach that level. Okay, so now we have 3 trades on currencies. Okay, and then let's go and observe some trades on commodities. Okay, so if we go back to investing.com and we click on, for example, commodities. Let's see what's going on the commodity side today. So we're gonna again need to customize it to 5 minutes, 30 minutes, okay, daily and hourly. All right, and then let's look at it. So we can see that's gold mixed, silver mixed, copper. Okay, you see there's not much of Brent oil. All right, strong buy recommendation. Brent oil on a strong buy. So if we go here and check Brent oil, okay, crude oil. All right, so where's Brent? Let's find Brent oil. All right, Brent oil. Here we go. Let's check that. Okay, and we're gonna put it here. So Brent oil. Okay, see, this is a huge spike. All right, let's go and trade the bits as well. Okay, we're gonna click on market. Now, when you go to trades with commodities, right? Like for example, oil. Now, oil you trade in barrels. So, for example, now 1 unit here, all right, it stands for 10 barrels, all right, 10 barrels. And in order for you to trade 10 barrels, you see, you need $135 because of your leverage 1 to 50. So let's just put here, right, make it, for example, 50, all right, or maybe, yeah, like 50 barrels, maybe, okay, $67, right, $67. And if we want to make 10%, that's going to be $6.7, right? That will be 10%. All right, and then what we need just from $67.60 to go to $67.73. So it needs to increase by 12 cents in order for me to make my 10% return on oil. So I'm gonna do that. Okay, following way, I'm gonna open my trade, right, and that's it. So my trade on oil is also live now. Okay, I can check that here. Right, so now I have USD JPY, Euro US dollar, British pounds, and I have oil. Let's just open one more trade for today. Something different. So we open commodities. Let's look at futures. Okay, futures. Again, we're gonna set them up. And this, like I said, the biggest companies in the country, right? We're gonna set them up like we usually do, half an hour and then hourly, right? To see what's going on now. And look, all futures now today in green, right? So you can select whatever you want, right? How about to go and to trade, let's say Nasdaq, S&P, or any other futures that you can see here. But we will look at the price because, of course, they require different capital to trade. So if we look at, for example, FTSE. So to trade FTSE, you see it's going up as well. Okay, crazy. Now, but to trade FTSE, the smallest trade size, okay, 0.01, right, to 290. Oh, well, the minimum one is 0.1, 0.1. Right, that's to $28, right? That's the minimum one, maybe 0.2. Okay, 59. So then let's make it also take profits. Okay, so we're putting 57 and we're going to put $6, which is going to be like rounded up 10% return. Okay, and we're going to click on buy. Okay, so now the trade gone live. All right, FTSE is also up. You see some of the trades that we open like oil or like Euro US dollar turning in green. It means that they already covered the loss. Right, and then let's look quickly at one more thing. Maybe we can look at something like Nasdaq 100. Okay, also strong buy. And remember, Nasdaq 100 is 100 biggest companies in the US. Here we go. You see, they're also going up a lot, right? With a lot of with a huge upward trend. So we're gonna go and trade 0.1, 124. Right, and the minimum one is one lot. Okay, I cannot afford Nasdaq because. Yeah, my liquidity is not enough to trade that. What about S&P 500? It's also on a strong buy. Do I have it here though? Let me see. S&P, SP, should be, but I don't see it. Anyway, let's add it. Futures. Okay, when we go to futures, we just simply need to see Microsoft. Oh, you see this mini, right? Maybe we can look at mini one. Let's see if mini will allow us to open a smaller portion of it. Okay, so what's the minimum trade size here on the mini? Okay, let's see. 0.01? No. Okay, so the minimum one here is still, okay, one lot. So doesn't really, didn't really help. But okay, let's just go and find S&P. All right, SP 500. Again, on futures. We can type it like this, SP 500. And why? S&P 500. Let's look at here. Okay. Now, micro. No, that's not the one. So here we go. S&P 500. Okay. Also going up. Now let's see what's the minimum trade size. 0.1. Right. No. All right. It's just also one lot, but one lot is 344. Now that's way too expensive. Okay. Look, so with indices, all right, let's just stick probably to just one that we have on on FTSE. So you have 1, 2, 3, 4, 5. We open 5 trades now. Okay, we're gonna check the markets and check these trades on our next session. So what I wanted just to discuss with you today is obviously the markets and the give me a moment. Yeah, just to go back here. So what I wanted to discuss with you today, it's the obviously today is Wednesday, 18th of February, and what's going on in the markets. As you could notice, there's no much that is happening in the markets today, even though yeah, the markets look quite positive with regards to, let's say, stock market, with regards to commodities, right? They're going up today, and obviously you need to be monitoring the markets on a daily basis. Majority of people don't watch the markets on a daily basis, so when they go, let's say, open a trade, they see the price now, but they don't know what brought the price there, right? Why the price is actually at that level. Okay, what kind of reports happen or what kind of news happened already, so what brought the price over there. So today we just observed that there's no much that happening now, as a couple of things coming later today, but it's Wednesday, middle of the week. Okay, no much of volatility. We still open several trades together using some technical analysis and market opportunities. If you keep following me, let's say on this channel, and I would like you, by the way, to subscribe, okay, so that you can actually follow every single time I go live to discuss what's happening, so that you may take advantage of that. All right, so subscribe to me on my channel here on YouTube, and what I would like you to also subscribe on my Telegram channel. Because on my Telegram channel, I'm posting every day the most important news that actually shaking the markets, that creates volatility, that create opportunities. And most of my news that I'm posting there, I'm posting before they happen. So I'm posting, let's say, some news that are becoming like some sort of like signs, okay, signs that's of something coming at the later stage. So that's why I would like you to subscribe to my YouTube, put the like, okay, and also put a comment below if you like that video, or if you're trading something and you would like me to put it in my review next time. Write it in your comments below. Like I said, follow me on Telegram as well, okay, so that's you can even talk to me directly over there. And yeah, I'm gonna remain at your disposal if you need anything. All right, look forward to speak to you soon, and new videos are coming soon as well, right? I'm running several things, and I'm trying to give you some time as well. So yeah, just subscribe to me so you don't miss my next video, which is gonna be very important as well, right? This is it for today. Okay, have a lovely day and enjoy your day to the most. Okay, bye bye for now.